All right, let's dive in. While everyone's eyes are glued to the flashy tech stocks, there's this old school American giant, General Motors, that's quietly gearing up for what could be a huge 2026. So the big question is, what is Wall Street missing? What's the story here? Is GM just, an old dinosaur, or is there something really powerful changing right under the surface? We're going to unpack the entire investment case for GM and see what's really going on. Okay, so first things first. To really get a handle on where GM is headed, we've got to understand where they are right now. And honestly, their future is built on a rock-solid foundation, and that foundation is just pure dominance in the areas where they make the most money. Check out this number, 17.2%. That is GM's massive slice of the entire U.S. car market. And what's really key here is that this isn't some shrinking piece of the pie. No way. GM actually grew its market share in 2025. They're not just holding on, they're strengthening their grip. Now that leadership, it translates directly into sales. GM is number one in the US. But listen, the real story, the secret sauce, is where they're dominating. We're talking about the high-margin sweet spots. Their full-size pickups, number one for 6 years in a row. And their full-size SUVs, get this, has owned over 60% of the market for 51 years. That is an unbelievable profit engine just humming along. And all that market share, well, it turns into some serious financial muscle. Think about it. Even while they were dealing with, a big reset of their EV plans, GM still managed to pull in $12.7 billion in adjusted operating income, what the pros call EBIT. And they generated over $10 billion in free cash flow. That's just the cash left over after running the whole show. That kind of resilience, that's the foundation for everything we're about to talk about. Okay, and that brings us right to the heart of the matter. This is the core of the whole investment idea, the outlook for 2026. Because management has laid out this super clear and frankly very believable plan for a massive jump in profits. And here it is, the big number. GM is telling the world they expect to make at least $10.3 billion in net income in 2026. Now, just to put that into perspective for you, that's more than triple what they did in 2025. That is a seriously bold forecast, and it signals some major momentum coming down the pike. So you're probably asking, okay, how are they going to pull that off? Well, it really boils down to 4 key things. First, people still want their super profitable gas-powered trucks and SUVs, so that demand is strong. Second, they're going to right-size their EV lineup to stop bleeding money there. Third, they're going on a hunt for major cost savings. And fourth, their financing arm, GM Financial, is going to keep kicking in solid profits. It's not just one thing, it's a whole strategy. And hey, it's not just GM's own team that's feeling good about this. The big Wall Street analysts are definitely taking notice. Bank of America, for example, just came out with a buy rating and slapped a $105 price target on the stock. And what did they point to? Exactly what we've been talking about. Their dominance in gas-powered vehicles and just how profitable their mix of products is. So what does this all mean for you, the investor? What's the bottom line for your portfolio? Well, what we have here is a company that's laser-focused on one thing: giving back to its shareholders. And it's doing it all while trading at a price that's, well, it's kind of hard to ignore. $6 billion. Let that sink in. That's how much money GM has set aside for a new stock buyback program in 2026. When a company does that, it's basically shouting from the rooftops that they think their own stock is a bargain. And for anyone who already owns shares, that's a direct boost to your investment's value. And it doesn't stop with the buybacks. They also jacked up their dividend by 20%. And this isn't just some one-time thing to make headlines. Nope, this is the 3rd year in a row they've raised it. That shows a real sustained commitment to putting cash right back into the pockets of the people who own the company. Okay, this is where the whole value thing really clicks into place. GM is trading at what's called a forward PE ratio of around 6. Now, the average for the whole S&P 500 market, it's about 20. So why is GM so cheap? It seems like the market is just looking at them like some old, slow-growth car company and maybe, just maybe, completely overlooking the massive profit plan we just walked through. And that gap right there between how people see them and what's actually happening, that's where the opportunity is. So we've established that GM is strong right now, but what about the long game? What about the future? See, this whole story is about way more than just selling trucks and SUVs. It's about GM transforming itself into a high-tech mobility company. And a huge piece of that future is a little thing called Super Cruise. Now, this is not just some cool gadget for your car. You got to think of it as a high-margin software business. It's like a subscription service that brings in money over and over again, and it's rolling out to more cars and more highways every single year. And you can see their tech roadmap right here in action. It starts with growing that steady income from services like OnStar. Then they're going to expand the Super Cruise network to cover over 1 million miles of road. And all of that is building towards the big goal: true, eyes-off self-driving tech by 2028. That's the long-term vision they're executing on. So at the end of the day, their long-term plan is pretty straightforward. It's built on 4 key pillars. Keep crushing it with the trucks and SUVs that make all the money, build up that software business we talked about, be really smart and disciplined about how they develop new tech like EVs and AVs, and finally, invest that money right back here in North America. So let's just wrap this all up. What have we seen here? We've seen a company that absolutely dominates its market, a company that's forecasting some seriously strong profit growth for 2026, a company that is aggressively giving cash back to its owners, and somehow it's still trading at a huge discount to the rest of the market. Which, it just leaves us with one last question to think about. When you look at this unique mix of stability, growth, and pure value, could this old school, iconic automaker actually be the future powerhouse that your portfolio has been looking for?